When it comes to making trading decisions, every successful trader and investor don't rely only on fundamental analysis. They have one tool in common, which is technical analysis. With technical analysis, you can beat the stock market and read stock charts. And the truth is, there are dozens of technical analysis strategies online. But let's be honest, most of them are either too complicated, too confusing, or simply don't work properly in the Nigerian stock market. You'll see traders using 15 indicators at once, colorful charts everywhere, yet they still lose money consistently. And the reason is simple. The NGX behaves differently from foreign markets. What works perfectly on US stocks may not always work on Nigerian stocks because of liquidity, institutional buying behavior, and slower market movement. So in this video, I'm going to show you the 5 technical analysis strategies that actually work on Nigerian stocks, the exact strategies I personally use and teach beginners. And trust me, strategy number 4 is the one that completely changed how I identify breakout opportunities on NGX stocks. So make sure you stay till the end because I'll also show you how beginners can practice these setups properly, how to avoid the biggest mistakes new traders make, and how you can learn trading one-on-one with me, even if you're starting from zero. So without wasting time, let's dive in. Welcome back to Trade with Raks, where I simplify trading, investing, and wealth building for Nigerians. Now, here's the truth. Most beginner traders struggle with technical analysis because they overcomplicate everything. I've had so many people message me saying, "Coach, I watch chart videos, but I still don't understand where to enter." Or, "I keep buying at the wrong time." And honestly, I understand because I made those same mistakes when I started. I used too many indicators, I listened to too many opinions, and I kept entering trades emotionally instead of strategically. But everything changed when I simplified my trading process, and that's exactly what I want to help you to do in this video. Because successful trading is not about knowing everything, it's about mastering a few things really well. And by the end of this video, you'll understand 5 powerful strategies that can help you identify trend direction, spot better entries, avoid fake breakouts, and improve your overall confidence on NGX charts. And guys, pay close attention to the volume strategy later in this video because that's where many beginners unknowingly lose money. Now, before we jump into the strategies, let's first understand why technical analysis actually works. Technical analysis works because human behavior repeats itself. Fear repeats, greed repeats, panic repeats, excitement repeats. And because emotions repeat, price patterns repeat too. Whether it's forex trading, crypto, US stocks, or Nigerian stocks, charts moved based on investor psychology. That's why technical analysis is really about understanding crowd behavior. Unlike fundamental analysis, which studies company financials, technical analysis focuses on price, volume, and patterns in the market. And here's something most beginners don't fully understand. No matter what the news says, no matter what analysts predict, no matter what social media traders claim, price is always the final truth. If price is rising, buyers are in control. If price is falling, sellers are in control. If price is moving sideways, the market is waiting for direction. And once you understand that, your entire mindset changes. You stop guessing, you stop chasing hype, and you start reacting to what the market is actually showing you. And here's something very important many Nigerians investing in the stock market still don't fully understand. A lot of people simply buy stocks and hold them for 1 year, 2 years, or even longer, just hoping the price eventually goes up. And yes, long-term investing works, but what many of you investing in the stock market don't realize is this. Using technical analysis can help you identify better entry points and better profit-taking opportunities, meaning you may potentially make double or even triple the same profit within that same period simply by understanding when to buy and when to sell. Because in the market, timing matters. Two people can buy the same stock, but the person who understands technical analysis often enters earlier, exits smarter, protects profits better, and avoids unnecessary losses. And that's the real power of learning how to read charts properly. And later in this video, I'll show you one strategy many professional traders use to identify high probability entries before the major move even happens. Alright guys, so strategy number one is trend lines. And honestly, this is one of the most important foundations in trading. Because before entering any stock, you must answer one question: what direction is the market moving? If you get the trend wrong, even a good stock can become a bad trade. Every strategy will fail, no matter how good it is. Now, a rising trend line connects higher lows in an uptrend. A falling trend line connects lower highs in a downtrend. Simple, but very powerful. And here is a major beginner mistake. Many new traders try to buy stocks that are crashing because they think they are cheap. But professionals don't trade based on cheapness. They trade based on trend strength. Write this down. Trade with the trend, not against it. If a stock keeps making higher highs and higher lows, that's bullish. But if it keeps making lower highs and lower lows, that's bearish. Now, here's where things get interesting. One of the strongest reversal signals is when price breaks above a falling trend line with strong momentum. That often signals that buyers are regaining control. And later in this video, I'll show you the one thing that confirms whether that breakout is real or fake. So keep watching. Strategy number two is support and resistance. And honestly guys, this is probably one of the most reliable strategies for NGX stocks. If you're familiar on this channel or in my coaching group, you've heard me talk about this a lot of times. Support is where buyers repeatedly step in. Resistance is where sellers repeatedly step in. Think of support as the floor. Think of resistance as the ceiling. Now, here's where this matters. These are the exact areas where price reacts most often. This is where reversals happen, breakouts happen, and profitable opportunities are created. The basic principle is simple. Buy near support and sell near resistance. Now, let me give you something powerful most beginners ignore. Support and resistance are not exact lines. They are zones. That means price may slightly move above or below before reacting, and that's normal. Another powerful thing is this: when resistance finally breaks, it can become new support. That's one of the strongest bullish confirmations in trading. And honestly, many NGX stocks respect these zones beautifully because institutional investors often accumulate shares around key price levels. Now, imagine combining support and resistance with candlestick patterns. That's where technical analysis becomes extremely powerful, and we'll talk about that shortly. Strategy number three is moving averages. This is one of the simplest indicators in trading, but also one of the most effective. Moving averages help smooth out price movement so you can clearly see the trend direction. Now, the main ones I personally use are 20-day EMA for short-term trend, 50-day EMA for medium-term trend, and the 200-day exponential moving average for long-term trend. Now, here's how traders use them. When the 20 EMA crosses above the 50 EMA, that's usually bullish. When it crosses below, that's bearish. Think of moving averages like the ocean tide. You want to swim with the tide, right? Not against it. If price stays above the moving averages and they are sloping upwards, that tells you buyers are likely in control. And one thing I love about moving averages is that they help remove emotional trading. Instead of guessing, you follow structure. But here's the secret most people miss. Moving averages work best when combined with support and resistance. That combination can massively improve your entries. And in a moment, I'll show you the candlestick patterns that can help you pinpoint precise entry opportunities. Now, this is where things become really exciting. Strategy number four is chart patterns and candlestick patterns. Candlestick tells you the story behind price movement. One candle can reveal fear, strength, rejection, momentum, or buyer aggression. Now, the most important thing to understand is this. Candlestick patterns only matter at important zones. A random candle in the middle of nowhere means very little, but a bullish pin bar bouncing off support, that's powerful. Now, some of the patterns I use most on NGX stocks include double bottom, that's a bullish reversal pattern near support. Double top, a bearish reversal pattern near resistance. Breakout from consolidation. This happens when price has been moving sideways for a long time and suddenly explodes upward. And honestly guys, some of the biggest NGX moves start exactly this way. Pin bar candles. This shows rejection. A bullish pin bar as support shows buyers rejecting lower prices. A bearish pin bar at resistance shows sellers rejecting higher prices. Another powerful candlestick pattern I use a lot on NGX stocks is the engulfing candle. This pattern can be a bullish engulfing candle, usually green, or a bearish engulfing candle, usually red. Now here's what makes engulfing candles powerful. The body of the engulfing candle completely covers or engulfs the previous candle, showing that momentum is suddenly shifting strongly in one direction. A bullish engulfing candle tells you buyers are stepping in aggressively and gaining control. A bearish engulfing candle tells you sellers are taking over with strong momentum. And when these engulfing candles appear at important support and resistance zones, they become even more powerful. For example, a bullish engulfing candle at support can signal the start of a strong upward move. A bearish engulfing candle at resistance can signal a potential reversal downward. This is why traders pay close attention to engulfing candles, because they often reveal momentum before the bigger move happens. And honestly, guys, some of the strongest NGX breakouts I've seen started with a simple engulfing candle at key support before the major rally happened. Now, here's the real secret. The highest probability trades happen when multiple confirmations align together. For example, trend direction is bullish, price reaches support, it consolidates and moves sideways for a while, then a bullish candlestick forms and volume increases. That's what traders call confluence, and that's where smart entries happen. But wait till you understand volume properly, because that's what separates real breakouts from fake ones. Now, strategy number 5 is volume analysis, and this is one of the most underrated tools among beginners. Volume tells you how strong a price move really is. Think of volume as fuel. Without fuel, a car cannot move properly, right? Same thing with price movement. A breakout on high volume is strong. A breakout on low volume is suspicious. And this is where many beginners lose money. They see price breaking out, they rush in emotionally, and then price reverses immediately. Why? Because there was no strong volume confirmation. So whenever you are analyzing any NGX stocks, always ask yourself, is volume supporting this move? High volume confirms conviction, low volume creates doubt. And one thing you'll notice over time is this. Institutional investors often leave clues through unusual volume spikes before the major move happens. That's why smart traders pay attention to volume. So guys, these are the 5 technical analysis strategies that actually work for Nigerian stocks on the NGX. Trend lines, support and resistance, moving averages, chart patterns and candlestick patterns, volume analysis. Now here's the truth. Watching videos alone is not enough. You improve through practice. And speaking about practice, that's exactly why I created my beginner trading workbook guide. Because learning technical analysis is one thing, but applying it correctly is another thing entirely. Inside the workbook, I break down chart reading, support and resistance practice, trend analysis, candlestick understanding, trading psychology, and beginner-friendly exercises to help you practice step by step. So if you truly want to improve your chart reading skills, I highly recommend grabbing the workbook. The link will be in the description below. And for those of you who want deeper guidance, I also offer one-on-one trading and investing coaching for adults, complete beginners, aspiring investors, and even kids from age 10 and above. Because honestly, financial education should start early. The coaching is designed to simplify trading and investing step by step in a practical and beginner-friendly way. So if you're interested, send me a message through the details in the description. Alright guys, before we end this video, let's do a quick trading quiz to test how much you've learned from today's lesson. I want you to pause the video if you need more time and drop your answers in the comment section. Let's see how many you can get correctly. So question 1. If a stock keeps making higher highs and higher lows, what type of trend is that? Pause the video and think about it. The correct answer is C. Bullish trend. Question 2. A breakout above resistance with low volume is usually... The correct answer is B. A suspicious breakout, because volume helps confirm whether buyers truly support the move. Question 3. Where do candlestick patterns work best? And the answer is C. At key support and resistance zones. That's where price reactions matter most. Question 4. When the 20 EMA crosses above the 50 EMA, that is generally considered... The answer is A. Bullish. Question 5. What is usually the safest direction to trade? And the correct answer is B. With the dominant trend, because the trend is your friend until it ends. Now comment your score below. Did you get 5 out of 5? 3 out of 5? Or were some questions tricky? And honestly guys, this is why practice matters. The more charts you study, the easier these concepts become over time. Now guys, if this video helped you, hit the like button, subscribe to the channel, and comment below which of these 5 strategies do you currently use the most. Thank you guys so much for watching, and I'll see you in the next video.